Good day, all. Ira Epstein of Linn and Associates with your metals market wrap up for this Monday, the 4th of November, 2019, just getting on to 3:30 p.m. Central Time. The market's just reopened for this trade. This is where the stock indices are right now. Metal market's not a bad day. Gold came back in the last hour of trading. It was lower than this, and it's been gradually creeping its way up. Copper market staying on the strong side. And you know what people are looking at? They are looking at the combination of U.S. trade. The U.S. today, from the looks of it, pulled out of the Paris climate deal. You can't just get out. You have to give a year's notice, which I understand our State Department's going to do today, and that was another Trump promise. The world's two largest polluters, by the way, are China and the U.S., so that gives you an idea there. We start getting tomorrow more reports on how our energy supplies are doing, and we'll find that out. And when you come to the dollar, it was up at the expense of a number of currencies today, which are falling back in part as interest rates in the U.S., when the futures are down, real yields are going up. So let's take a look, if we could right now, at what gold is doing. And as I said, we're around 1512.40 right now, still shy from this 1526.60, the most recent high close, but only $14 or so off of it. You can see that it was a very quiet day, an inside trading day today. Inside days are fascinating. Why? Well, with them, you sometimes get changes in the swing line. So today's action puts the swing line with lower highs and lower lows. That is the definition of a downtrend. But you filter it with moving averages. And the market is trading over the 18-day moving average of closes, which means the bias is up. What's bias? I define bias as when the market is over the 18-day average, it's up. When it's under it, it's down. And when it's right on it, it's neutral. So while I have the swing line down, I also have the bias up. The two counter each other. If today's highs of 1519 are taken out tomorrow, the swing line could easily have a pattern of higher lows, higher highs, negating this downtrend. The bias would be up at that time. Where's the resistance? Right where you've stopped, at the 18-day average, at the upper Bollinger Band, right here. Supports the 18-day average. Another layer of support, if you broke down hard, would be the combination of the Bollinger Band and the 100-day moving average in green. But you're fighting at a resistance point right now in the market. Now the question is momentum. Momentum is overbought. So I have an overbought market into serious resistance. You could turn the swing line up if you take out 1519, but buying over an upper Bollinger Band is just not something I teach, nor do I teach selling under them. I find too often they fail at them. What do you do with that? So I look at the other markets. Am I getting a clue? And I'm really not. I have a lower low, higher high, fighting at a Bollinger Band and the popular ETF GLD, and overbought. Again, this market, if it takes out 142.90, could turn the swing line up. You could end up with higher lows and then higher highs. But my dilemma is over an upper Bollinger Band. Is this area going to turn out to be a base in this area? I don't have an answer yet, but market's certainly looking like it could. In GDX, the trend is up. You have higher lows and higher highs. The market is in a pullback into support at the 100-day average of closes in green, then the 18. To break the uptrend, you've got to take out 26.73 on the current pattern, and you are overbought as can be. Has not been strong enough to get up to the upper Bollinger Band, which is 28.28. The gold-silver ratio is drifting, but still favoring silver. First thing, you're under the 18-day moving average of closes, so the bias is down. The lower these numbers go, the stronger silver gets relative to gold. Just think of it. How many ounces of silver do you need to gold? Up here you needed 93.5. Now you need 83.70. That's 83.7. Then when we get to the silver, you're riding the upper Bollinger Band in an overbought condition. The trend is up. Take out 1793.50 and you could end up in this market with a higher high, because today's high took out 18.5 and a lower low. Again, a confusing picture. In the copper market, you lost your embedded reading back here. And when you did it, you instantly made a run to the 18-day average of closes and the 100-day, and you've stabilized since then. The pattern is one of higher lows, higher highs, but overbought. Resistance back at the upper Bollinger Band support these two numbers. In the platinum market, the market is, as you can see, overbought right here, not embedded. Overbought, has hit resistance, stalled itself out, the trend is up. The palladium, and if you got my written update this morning, I was telling traders, watch out, you had lost the embedded reading. If the way it was acting, it was going to stay lost. That means a challenge of the closest moving average. It's not the 100-day, it's the 18 in this case, could be in the cards. You have the outside day down. My analysis would be wrong if you took out today's high tomorrow or the day after. Other than that, I think the 18-day average is in play for this market. In the dollar index, it's what you call a really ugly chart. And that is the term I use for it, ugly chart. I want to explain why. You can see how you had patterns of higher lows, higher highs. Admittedly, it was under the 18-day average, so the bias was down. This is a contra trend play. Then the market broke down, and now the market has an outside day down on Friday. If you take out the high of an outside day down, I call it a bear trap. And what that does is it could set up a mess for the swing line. What it did is that today. Now, what's the number that I look for it to go to when that occurs? The closest moving average or Bollinger Band. In this case, the 100-day average is it. It went right there and sort of petered out on us. Don't know what that means one way or the other. I see another level of resistance up here. But I guess that all I could say is you got a higher high, lower low pattern now, I'm guessing, in an oversold condition. So you put it together, you're trying to figure out what to do with all that, and sometimes life isn't that easy. Now, we put together for you this brochure from our good friends at Modern Trader, Technical Tips of the Pros. And if you're a Gann trader, I don't know if all of you pay attention to Gann, Fibonacci, and the other parts. I certainly understand them. Am I an expert in them? Heck no. I can't figure out Gann come life of me. I've tried it, worked with many people that are the so-called experts for decades. Still can't figure it out. That doesn't mean it's not there. It's all math, and math isn't my strongest suit. Otherwise, I'd be an algo trader, right? How do you optimize stops? These are things I like to read because now I'm getting ideas from people as to things I can understand. For others of you, you may understand that part. But in any case, just go to our website. You're going to see our list of free offerings right on the front page. Click them, fill out the form. We'll get everything to you by email. You can click up here. That'll happen as well. I'm going to have another special report out this week. Haven't decided yet what I wanted to do with it. I was too busy with football all weekend, and aren't those Bears terrible? I'm Ira Epstein. You have a good day, and I'll talk to you later.